Hey, good afternoon, everyone. This is Mark from Right Line Trading. There really still a lot of traders coming in. I'm just going to give it 60 more seconds, and then we're going to begin. Okay, we're going to begin, and I really appreciate everybody who's come aboard. We have a lot of people, and to give me your time today, and I really think you're going to be impressed with our software. Now, I'm going to start with this disclaimer that all signals and trading opportunities provided both orally, written, or electronically that are disclosed to visitors or subscribers for educational demonstration purposes only. Right Line Trading takes no responsibility for any participation by visitors or subscribers within the futures, forex, or stock markets, nor for any profits or losses may be incurred. Participating and trading in the forex and futures market involves risk. I think everyone understands that. And trading may not be appropriate for everyone. You have to carefully consider your financial position before making a trade. You may want to do your own due diligence, consult a financial advisor prior to making any trading decisions. And those of us at Right Line Trading, we are not registered financial advisors and not licensed commodity trading advisors. Now, what I'm going to talk about today is a market scanner. And I wanted to start off with what is considered to be one of the most sophisticated market scanners out there. And what it really is just an amalgam of disparate variables in which you have to put everything together and integrate into a whole to create a trading opportunity. You can see here you've got the low volume instruments, you've got the momentum scanner, you've got the reversal scanner, relative strength. These are the trades that are gapping, I guess, at any given time. I mean, there's no single signal on any stock, forex, or future that gives you a buy or sell signal based on a preset number of variables. And this is the reason that so many traders in the market have trouble making money. I mean, 95% of traders who start, and you know, I don't want to sing the tune that you probably hear all too often, but most traders, the vast majority of them, wind up busting out of the market. And we had a stellar week in the trading room. We made terrific money. And it's because we just use a different kind of system. We don't care about stocks gapping or looking for tops or bottoms or RSI extremes. And just to give you a really good example, a stochastic extreme means absolutely nothing. Now, a market can stay overbought for a minute, an hour, for a week, a month, or months. So if you use an RSI extreme as a component in taking a trade off of a market scanner like this, you're very likely to get into big problems. I mean, basically, big money is in control of every financial instrument. It doesn't make any difference anymore whether it's futures, forex, or stocks. It's the institutional money. It's the banks with their algorithmic trading. I mean, obviously also it's big news, but big news is what triggers big money to come flying into the market and have your instrument make a a real large change in price. It is definitely not commercial traders who run the market. It is institutional traders. And if you try to look at RSI extremes, you're going to be in big trouble because, as I said, the market can be overbought or oversold for an indefinite period of time. Again, as far as gappers are concerned, I know it's a big deal in trading gaps. To me, it's a gimmick because the only thing that matters is remember that, and this is, I think, a really important point that I want everyone to understand. And I want to try to make this educational, not just show you our software. I want you to take away a lot of information from this hour. And remember that a stock, future, or Forex market gaps pre-market. And that gap is not created by institutional money. It's created by commercial traders. So any pre-market evaluation of a gap is useless. And I know there are tons of programs out there that, have 26 points, 84 points, 8 points, 7 points, whatever, and they do a pre-market analysis of the gap. That pre-market analysis is worthless. And really what this is looking for is pre-market gaps. But whether a stock is gapping up pre-market or gapping down pre-market doesn't really give you any insight into how the stock is going to move once the market opens. Because that's what institutional traders are going to come in and either drive it lower or decide it's oversold, and they're going to look upon it as a buying opportunity, and they're going to take it back up. You cannot tell from this. So relative strength, looking at gappers, these are just variables that are just going to get you into more trouble than they're going to help. And again, this is a huge problem. Now, big volume is great, but as a sole parameter, it's just not going to get you a winner. So what we need to do is a system that integrates everything together to provide you with a really good buy-sell signal, and one that's not going to follow standard indicator analysis. These indicators have all been around for the past 20 years. And remember, I'm telling you, nobody makes money off of them. And all of these high-powered marketing firms that you see on, I see them, I've been cookied. I see them on YouTube. I see them on Facebook constantly. In fact, they drive me insane. They're just trading the old trade methodologies, and basically they're just selling you a phony bill of goods. And I'm not telling you that for any other reason than I just want to keep you out of trouble and keep you away from not wasting your money on software that isn't going to work, but really wasting your money when you try to trade a system that just isn't effective. So let's walk away from this kind of scanner. Now, this scanner is used by a very, very sophisticated company that markets everywhere. In fact, I can't go on the internet and not find them because they put a cookie on my email address or whatever. If I bring up a news page, they're bannered. If I bring up my own video in YouTube, they're at the bottom, advertising. They're everywhere. And they use this system to find winners. And I'm telling you, it is not possible. This kind of thing has been around for 2 decades. And I don't see all these profitable swing traders and day traders running around with a lot of money. Most traders are still walking off a cliff. So what I'm going to do is I'm going to come off the slides. And I want to show you something that's very different. And what I want to do is I want to start out. Here's the scanner, and I don't want to show that to you right away. I want to show you the components of the scanner. And this is what the scanner looks at. And this is what makes the scanner so powerful. Now, here's price movement in the market. Now, we care about a lot of things. The most important thing that we care about. Now, here's the 50 right here. And the scanner is only going to give you a short below the 50. Oops, excuse me for 1 second here. I don't know. Just excuse me for 1 second. Okay, I'm here. Okay, so so not only does it look at um, uh, a lot of different variables, it looks at market structure. Now there's an indicator that I do believe that I have to add. Hang on 1 second here, and I see the problem with it. It just hasn't been formatted right. And there it is. And just let me make sure all of these are formatted right. Yes, they are. Now, the most important thing that the scanner looks at is the multi-time frame alignment of the financial instrument that you want to trade. Now, I put up crude oil. It doesn't matter whether you're trading a stock, a future, or a Forex instrument. And I'll give you a brief look here. If you look, this is the Dow 30. I put in a bunch of Forex markets right here. There's more stocks, and we've got futures in here too. Where are they? They're hiding from me. Here's where are they? We'll add them. I'll just add two really quickly right now. Add instrument. I'll just add crude, and it's going to load. And I'm not going to watch it load. And I'm just going to add another instrument. I'll add gold. Okay, it's already in here. So we'll find them. Here's crude. And you see it's giving us a triple sell signal here. Whoops. Across the board. So you can look at anything you like. These are the time frames. Unarenko 2510, 41020. It's a 5-minute, 15-minute, and a 1 hour. So you can also look at any time frame. But the most important thing that the scanner looks at is the multi-time frame alignment and trend of the financial instrument that you're trading. This green background is the trigger, is one of the components it must have in order to give you a buy signal. Without this green background color, you're not going to get a trigger. The only thing that can create this alignment is institutional money. Because as a closed system, every market wants to move and chop. And the only thing that can create a multi-time frame alignment and trend is institutional money. That's independent variable number one that must be present in order for you to get a signal. Independent variable number two is this line. Now this line looks at 3 correlative markets to crude. In the case of crude, we can't give them out because it took us months to determine what they are. In the case of the E-mini, it's the Russell, NASDAQ, and Dow. In the case of the NASDAQ, it's the E-mini, Russell, and Dow. Those are the correlative markets. But we need to look at 3 other instruments that either rise when crude rises 70% of the time or greater, or falls when crude rises 70% of the time or greater. And what is that telling us? It's telling us about money flow. If the instruments that go up when crude goes up are going up, and the instrument that goes down when crude goes up is going down, really what it's showing you is that the institutions are doing a rotation of institutional money. And really throughout the course of the day, that's all that's taking place. Institutions are rotating their money from market to market based on market conditions and whether they have risk on or risk off. In the case of crude oil, it's their belief that whether crude is going to go up or down. That sentiment changes, and crude is extremely volatile. But this is a very, very important indicator to tell us about money flow. And this is a component of the analyzer or the scanner. You're not going to get a green buy signal without a multi-time frame alignment and trend and the indicator that tells us that money is flowing into the financial instrument that you want to trade. You'll notice that the conventional stuff is gone. We're not looking at relative strength. We're not looking at Momo breakouts. We're not looking at gappers. All that stuff, like I said, has been around forever, and it's never going to make you any money. And all it's going to do is walk you into losers and prevent you from taking winners. This is just going to do just the opposite. Now, the other parameter that's very important is this is the Laguerre oscillator line. But this Laguerre oscillator is a multi-time frame assessment. You're trading a 2-unit Renko, it's looking at a 4 and a 6-unit Renko. Because what's happening on your trading chart is irrelevant. The only thing that matters is what's happening on the higher time frames, because the higher time frames are what lead price. That's why this green background is not caused by price rising. Price is rising because your 2 higher time frames are aligned to the upside, and it's always going to pull price up. The bias is always going to be to the long side. Well, when the Laguerre oscillator is heading up, in this case, it's locked long, it means there's tremendous buying pressure in the market on multiple time frames. And it really is another proxy for institutional money. And you see right here, the Laguerre turns orange. And both of those higher time frames, the Laguerre has crossed the 80 line and is now heading down. Now here it locks short because price is going up. But remember, sometimes those multi-time frames are going to lag. When you're in a great trend, they confirm the trend and get you into a winner. And remember, our job as day traders or swing traders or options traders, I mean, I had a guy yesterday who's trading this on binary options because it gives him a terrific direction. And if he trades a 15-minute binary option, he takes a signal off the 15-minute column. And you can make any column you want. You can make a 4-hour, you can make it daily. It does not make any difference. You can create any time frame you want here. You even create a tick time frame. If you want to look at a 610 tick, it makes no difference. And he's doing amazingly well with binary options because what they're doing based on his time frame is they're calling a long trade right here and right here. And the multi-time frame Laguerre is locked long. Now, I just want to talk really briefly about oscillators and the Laguerre. I'm not going to put up, I have a slide where I have the Laguerre oscillator, relative strength, Williams percent K, stochastic. All the other oscillators are geared to look for divergent signals. And if you trade divergent signals, I can promise you, you're going to wind up busting out of the market. Divergence has been around forever. And the guy who invented the stochastic oscillator, George Lane, did it in 1957, a brilliant mathematician who unfortunately died a pauper. And a lot of brilliant guys did. I think Vincent van Gogh died a pauper, or killed himself when he had no money. But in any event, back in the 1950s and 60s and 70s, when institutional money didn't rule the market, a divergent signal might have been a good trade to take. But nowadays, if you try to trade divergence, it'll work once, it'll fail twice. And the problem is you can't make an assessment of risk when you take it. Like, you don't know, okay, is this divergent signal going to work? I have no idea. Then you take the next divergent signal. Is that going to work? If you can't assess risk on a trade, then you should not ever take it. What we did with the Laguerre is we modified it. So it doesn't look for divergence. What it's looking for is significant buying pressure and significant selling pressure. Now I'll put the analyzer up, because as I'm talking, the signals are changing because the markets are open. And I don't want it to take up the whole space, but you're going to see that you're getting things are occurring in, on different time frames. You're getting buy signals flat, and it's following all these instruments. Now, the third component that the Laguerre that the system looks at is momentum on your trading chart. It's the only parameter that we use to trade with, and the market scanner uses as well, because you have to have momentum on your trading chart moving in the direction of long-term momentum. So we're just looking. Now, we made this signal B, so it's really easy to see. And we want this B signal, which is really assessing the direction of our Laguerre on our trading chart, to be either locked short or to be locked long. And you see how the Laguerres are in opposite directions here? And you have no money flow, and you have no background bias. This is where you would never get a signal and never take a trade. And when you get in alignment, like right here, you might get a signal. Along here, you might get a signal. And here's where you're going to get your big signal. Short. And then short. Now this is a day trading time frame that's going to get us into potentially fairly short, fairly small trades, maybe 15 to 30 ticks. We're not looking for a monster winner here. This isn't a 5-minute, this isn't a 15-minute or a 1 hour. The point I want to make here is if you're trading, say, an option, and you want to take a short position, and you get that and that, and everything here is red, you're just going to take the trade all the way down. And you're going to have a sell signal all the way here. That's what the scanner looks at. And those are the key parameters. Now, like I said, you can look at, I'm gonna bring the scanner over. You can look at any time frame you like, and you can mix and match Forex with stocks, with futures. It doesn't matter. As long as you have a data feed, it's going to give you a great entry. Now, if you're trading a 2, 5, 10 Unorenco, you're going to look at this column. If you're trading a 4, 10, 20 Unorenco, you're going to look here. That's your 5-minute. This up here is the speed of your trading chart. If you're trading a 5-minute, you're going to look here. If you're trading a 15-minute, you're going to look here. A 1 hour, you're going to look here. You don't look at multiple time frames. Remember, the 5-minute has to align on a 15-minute and a 45-minute. So this buy signal is only going to come when you already have a multi-time frame alignment in trend. So you don't need to look here at a 5-minute, a 15-minute, and then a 45-minute. It's all being done in this column. And it's looking at the quants on all those time frames, the money flow line. It's looking at the Laguerre on all those time frames. And it's creating the background bias. So all of these independent variables are going into the columns to provide you with an entry. So let's take a look at some of the entries, and I'll look at a few, and then I'm going to open it up to questions. It's really easy to format, and you can really trade any time frame you like. Obviously, you can day trade it, you can swing trade it, you can long-term swing trade it. It's really pretty much up to you. Now, there is an only, I think there's an only on top here. See, always on top. You click that, it'll never go behind the chart. So we can put it up here, move this over, and it will always stay in front of the chart. Now it's wide because I've put so many columns in. I wanted to give it diversity in terms of time frame. So let's take a look at something that's giving us a buy signal that we're interested in. Why don't we take a look at we'll take a look at Apple. Why don't we take a look at Apple? Now, I have a 15-minute giving us a buy. I have a 4, 10, 20 Unorenco. I have a 2, 5, 10 Unorenco. Since we're on a 2, 5, 10, let's just switch this to Apple. That's coming in, and there it is. Look at the background color. It's green. Look at where the candle is. It's above the 50. Look at the money flow. Positive. Look at the multi-time frame Laguerre. Positive. Look at the slope of the chart Laguerre. It's heading up. And it's giving you a buy signal on Apple on this time frame. Now, right now, Apple's moving slow. It's a Friday. The market's is in a funk, and we're not going to get Apple rocketing. But you can see if Apple right here had good volume and it's going up, you would have a stellar trade on Apple. The best trades to take, and if you do come aboard, I'm going to teach you a few nuances. Taking a trade right off the 50 like this is a stellar entry. Because when you trade closer to mean price, that's where you're going to get your big runners. And Apple's going up. We could change the time frame and take a look at Apple on a different time frame. Why don't we take a look at Apple on a 15-minute? And let's go to minutes. Let's go to 15. Now, one thing that we're going to do when we go through the tutorial, if you come aboard, I don't want to do this during the webinar, is you're going to create templates. So you only have to do this once. And if you're trading a 15-minute, you're going to have to create, this is the input here. Oh, I'm sorry, the input here is 15. And I'm sorry, it's 45 minutes. You have to go 3 time frames higher. On the MTF Laguerre, you've got to change this to minutes, and you got to change this to 45. And your quant, which is measuring money flow, also has to go to time, minutes, and go to 45. It will pick up the higher time frame. You're putting in the next higher time frame. 3 times 15, 45. And there's your trade. Now, Apple here is not in a great spot on this time frame for a trade, although you can see the long trade signal is superlative. Green background, green quant, green multi-time frame Laguerre, chart Laguerre locked long above the 80 line. It's in a perfect spot for a long trade. And what it is it's really worthy of a look. But really what you want to do is, and I'm really constraining it, I could just tell you to take a trade right here, but your best trades, and you're going to have so many instruments to choose from, is close to the 50. And when you get close to the 50 on a 15-minute, I mean, you could be in that trade for the entire day. I mean, this is where you're going to try to lock in, $4, $5, or $6 on Apple. And if you can either trade the stock if you have a lot of money, or if you don't, you buy an at the money call. Or if you're willing to risk a little bit more money, you buy an in the money call, and you get $2 or $3 on Apple on an in the money call or an at the money call. You're going to make a significant amount of money. I mean, the delta on those kind of options are huge, and you're going to make 50 to 100% on your money. And we can look at anything that you really want, and you're going to see that this alignment holds true. Now, why don't we look at a Forex market, and then I'm really going to open it to questions, because it's really very straightforward. The only additional thing that I'm going to do, see, here you would have been signaled into a short trade right here. Now, you see how this turned pink right here, or this turned green? It would have taken you out of the trade basically at break even, but it would have signaled you in, and if you wanted to stay in, it would have given you a perfect winner. This red background is going to pull this price down. What you want to get in is at a really advantageous price, and the best price to get in, I don't have much, I don't have many days on a 15-minute, and I don't want to have the chart take a long time to load, is fairly close to the 50. I like to trade close to mean price. That's just my style. So let's take a look at the euro dollar on a 410.20. Here's the Unirenko. We're going to dial in the 4, and we're going to look at the euro dollar. Euro USD. All right, it's loading and changing. Now again, you're going to make templates. So you don't have to make any of these adjustments like I'm doing every time we change. What we have to do is go back to the indicators and adjust them again, because now we're trading a different kind of chart. So background bias now goes back to range. We're trading a 4-unit Renko. So and we're going to give you all these settings. These are really simple. And we're going to give you most of these templates. A template for a 2-unit Renko, 4-unit Renko, a 5-minute, 15-minute. You're just going to be able to insert these. Now the input here on the bias is a 13 range. The input on the quant is a 13 range. This is money flow. And it's going to look at the 13 range and the 21 range. That's the next highest fib number. And the MTF Laguerre right here is going to go to range. And I remember, you're only going to have to do this once. And we're going to give you a lot of these templates. And there's your Euro USD. Now the Euro USD is still signaling a buy on the 41020. And hang on one second here. The Euro USD on the 41020. Now on the 41020, we don't have the quant. And I would have to ask Sergio why we're still getting a buy signal here, because we should not. And let me just make sure that the 41020 is looking at the right time frames. Yep, see, it's looking at the wrong ones. It's got to look at the 13. It's got to look at the 13. It's got to look at the 13. And that's the problem. And again, you don't have to reset these. Now it's going to recalculate. And all of this stuff is going to come pre-formatted, so you don't have to worry about that. And see, now the Euro USD is reading what it should, flat. No signal and no buy. So I will look at anything that you like. It's never going to put you in the wrong direction. You can watch an unlimited number of instruments. And if you look at NinjaTrader 8, you can build another chart here. And you can build another chart. You can have literally 14 or 15 charts along the bottom of whatever markets you want to trade. If you want to trade the for many months, I had a forex trading room, and I traded that, and I would get up at 2 o'clock in the morning to trade the forex, and then I would get up again at 8 o'clock in the morning to trade futures. We made great money on the forex, but after 6 months, I was basically ready for a hospital bed. So I had to close the forex room. I just don't have the energy to get up at 2 o'clock in the morning, then try to fall back to sleep again, and then get up again to trade futures. So I had to close the forex room. But you're going to get great. And what I would do is I would look at 12 forex pairs at the same time, wait for a buy signal, and then across the bottom of my chart, just pop that chart up and look to see if I got a long signal fairly close to the 50. If I did, I was in. It's just that simple. And when you trade 12 forex instruments on a fairly short time frame, you're going to get a ton of signals. The problem is sometimes you're going to get too many. So you have to worry about getting also a little bit of overload in terms of visual overload. Again, as many stocks as you want, as many futures as you like too. and the analyzer works great on futures. If you want to follow 4 to 6 futures markets, like I follow 4. I look at crude, I look at the NASDAQ, which are our 2 main, and I have gold off to the side, and I have the E-mini off to the side. And the alignment on any of these settings gives me a great entry. Now, I trade a 4-10-20 on some, I trade a 2-5-10 on some, but you can trade minutes. You can trade Renko. You can even trade Renko, although I don't recommend it. And you can also trade tick. It makes absolutely no difference. We'll configure the templates for you. And here's how you do it. You just right click, go to templates, go to load, and you're going to have the scanner pre-formatted with the time frames that you want to trade and the instruments already inserted that you want to look at. So I want to take this instrument and call this the RLT CANNER scanner and save it. Whoops. I have to load it. I hit the wrong button. It's got to be save as, not load. I'm sorry. Cancel and go to templates and go to save as. And now I can save it. And now the next time I want the scanner to come up, it'll just come up blank. Just right click, go to templates, go to load, and put in scanner. If I can find it. Right here. Where'd it go? It's right here. It's the only word with scanner. And it'll just load the template for you. And you don't have to do any work on that. Right? It's right here. Market scanner. So you only have to do that once. Now, I want to show you the offer that we're making, and then I'll answer any questions that you have. And I'm telling you, if you're not making money in the market, there's 2 reasons, general reasons why. One is you've been taught a methodology that doesn't work, and you're using indicators that don't have forward-looking ability. No indicator that assesses the movement of price on your trading chart. Now, as an example, I just want to show you, look at price right here on the Euro USD in this period. Now remember, this background bias is not created by the fact that the Euro USD went up. It's created because the higher time frames doesn't look at price on your trading chart. If anything looks at price on your trading chart, it has no forward-looking ability. That's what you see 99% of the time on software that has that background color. All it's doing is telling you what price on your trading chart is doing. So maybe if there's a MACD crossover, the background goes green. So big deal. What kind of predictive values does that give you on the right edge of the chart? None. This is looking on the 4-unit Renko at the 6, and well, actually it's looking at 2 higher range time frames. We use range on the unit Renko. Money flow is looking at other markets on a multi-time frame basis. And this, now correlative markets on the Forex are really easy. We still don't give them out because we have the tightest correlative markets. But it's easy for us to get other markets. They're going to rise when the Euro USD does, and it's got to rise at least 70% of the time. And we look for markets that rise 80 to 90% of the time. And you see this whole green line here? This money flow indicator, as long as money was flowing into this instrument, it rose. and it is not looking at this market at all. In fact, right here it's a small area green and price is falling. So you have no trade here. The point being, it is just not looking at price on your trading chart. There's no assessment made. Here it's looking at other markets. The multi-time frame Laguerre, that orange, can't trade it because the multi-time frame, it's heading down. Here is your entry. And up you go. And that's a nice move. And the Laguerre on your trading chart is lock long. Now, I just want to say a couple of really quick things about the oscillator. The oscillators measure momentum, and momentum is it's called a second order parameter. The speed at which price rises is not momentum. If a race car is going around the track at 100 miles an hour, its momentum is flat. What this is looking at is the rate of change in speed. So if the instrument is accelerating to the upside, that's when this locks long. And that's when we know there's so much buying pressure on the market on a multi-time frame basis. Our chart Laguerre aligns. We've got a great long trade. The likelihood of getting caught in the wrong direction are slim and none, because you're just not going to get a down candle as long as you get this alignment. And this alignment is not created by anything on this chart. Now, just to show you quickly, on a long trade, here's the close of the instrument, whatever price that is, and here's the high of any given candle on the higher time frame. Now, as the close approaches the high, it means that price is accelerating upwards. And as long as that close continues to approach the high, that's what keeps the Laguerre long. As soon as that close starts to accelerate away from the high, that's when you know that the power of the bulls is starting to fade and the Laguerre is going to turn. This is what we want to trade. And this is acceleration. It's not speed. And it's a very, very powerful assessment of how price is going to move. The thing is, the Laguerre is not formatted to look for divergence. Although it will give you divergent signals. We don't trade them. Because like I said, you can get an instrument that is overbought for days. And you'll get multiple divergent signals that are run over. So let me show you the offer. It's right here. I'm just going to move this off. Now here's the market analyzer. I'm not going to, it's normally $1,000. We're going to discount it to $597. Now you get a significant, there's a significant amount of additional stuff with it. You're going to come into my live training room, and we're going to give you a month access. We have 2 other training rooms. You're going to go into 3 training rooms. My trading room trades futures from 9:30 in the morning until we hit our profit target or the market peters out. On Thursday, we traded for 9 minutes and we made just under $500. That's our profit target, and we were gone. Today, we made just under $400, and because it's a Friday and we closed our week really with a lot of money, I just stopped. Monday and Tuesday, we had a trade, we had longer trading periods, but you're going to learn how to use everything here learn our trade methodology, it's really good. It's going to increase your learning curve. Now, David, who's our other trader, who's outstanding, he trades in the evening time. Now, I believe his room starts at 8 p.m. Eastern time, and he is a stellar trader. So if you work all day, or if you've made a lot of money in the day session and you want to pop a few extra winners on the night session, you can trade at 8 in the evening until about 10 o'clock at night. Now, in addition, next month, he's going to start, there's only going to be 4 sessions, but he's going to start trading the Globex Open. And I can't remember the time that is. It's early in the morning Eastern time. So you really have 3 rooms. You get 1 month access for this same price. We install everything. We create all your templates. You tell us the time frames that you want to trade. We'll show you how to load any instrument you want. The important thing is that you let us know what are your time frames. You can always add more, delete some. I'm going to put you in a webinar with me where I'm going to show you how to format it, but you're going to get all that format, 99% of what you need on installation. Then you're going to get a video tutorial library. It's got 450 videos. Now, the first 10 orders get the indicators as well as the scanner. Now, if you're the 11th order, you're just going to get the scanner. You're going to get the buy flat. I was going to say we don't have any sell signals. There's your first sell on Home Depot on a 2510 Unirenko. But if you're one of the first 10, you're actually going to get the software. So in that, we're going to format this for you and create the templates. So if you're trading the 4-10-20, you're going to put in the 4-10-20 template. You're trading the 5-minute, you have to put in the 5-minute template. There's a little bit of work you have to do because everything is doing a multi-time frame analysis, and this indicator is doing a multi-market analysis. So unlike all the other trading platforms, you just can't go up here and change the time frame. It's just not that easy. So, but we're going to format them. We're going to create the templates for you. So 90 to 95% of your work is going to be done. And you get the software as well if you're one of the first 10. So why don't I see if there are any questions. Our number is 786-732-4656. And the offer expires on Sunday at midnight. I don't know when the first 10 are going to go. But when those first 10 are gone, you are not going to get the indicators. You will get a stellar, we call it the analyzer. It really should be called the market scanner. Because an analyzer, I think more makes the supposition that you're going to be looking at rising triangles, falling triangles, bull flags and bear flag patterns. Let me tell you, those have been around also for 20 years. And they make a couple of fake gurus millions of dollars, but they're not going to make you anything. So it doesn't really do an analysis of the market. It scans the market for your best potential entries. And you're not going to want to trade without a green buy or a red sell, because you're not going to have the multi-time frame alignment and trend. You're not going to have the correlative markets. You're not going to have momentum with you. And those are the times that really define chop. And that's what you got to stay away from. And if you can stay away from chop and only trade a trending market, I'm telling you, that's 90% of the battle. And the last thing I'm going to say before I throw it open to questions is, what is your number one goal as a trader? And obviously it's to make money, but how do you do that? And the way you do it is not by getting winning trades. It's by avoiding losing trades. If you can sidestep losers, you can make a ton of money. Yesterday, I had no losers. Today, I had one loser. On Monday and Tuesday, almost no losers. Wednesday, I picked up 3 losers. And you know what? How much money I made on Wednesday? Nothing. In fact, on Wednesday, I actually lost $10. So, and I got a 35 tick winner on crude. I got a 25 tick winner on gold. I got a 5-point winner on the E-mini. I got huge winners, but I got nailed on 3 NASDAQ losers. So it's never about getting winning trades. You always will. It's about avoiding the losing trades. And even though I picked up 3 losers on that session, I was still able to trade to break even. And then yesterday and today were cake. We made, between yesterday and today, we made about $1,000. So that's really the name of the game. And this is really going to help you do it. Stay away from the yellow. That's chop. The green is a trending market. That's where your potential low risk entries are, or red. Right now, the market's strong, so all we're getting are buy signals. Now, let me see if there are any questions. Okay, I got some here. Let me just scroll to the top. Hey, guys. Sure, Aid. I mean, listen, I got a ton of stocks here. I mean, if you want to see additional ones, I'll be more than happy to do it for you. You know, if at the bottom you type in a stock and a time frame, I mean, I'd like you to use the 5, 15, or 1 hour because I already have it formatted for those time frames. So it'll make it a little bit easier for you. But I'm telling you, these are universal forces that push price. And it doesn't matter whether you're trading Forex, stocks, or futures. And here's one of the things that you need to always remember. When you're evaluating a software package, if you're told, this works on futures but not Forex, this works on a 5-minute but not a 10-minute, you know, you have to use a 450 tick, it's broken. It either has to be, have to be universal forces that drive price in any market or any time frame, or they just are not going to ever make you money. So these are time frame independent and instrument independent. And those are the only things that have forward-looking ability and are going to get you where you want to be. And I'll tell you why this trade here, this is something I would go over in our master class, why this is such a great entry. I'll just tell you this really quickly. Right here, what do you have right here? A down candle. Now, why are all these traders trying to sell the market? Order flow, money flow is in. Momentum on 3 time frames is aligned to the upside. So price is accelerating long. You've got a multi-time frame alignment and trend to the upside. So the reason we go long after a down candle is because we're going to run these traders over. And when we do, they're all going to get stopped out. And when they get stopped out, they have to buy contracts to close their short positions. Take it up to here, you get a down candle. Now you're still on a buy signal. The buy comes in right here. And these are some of the little nuances I'm going to teach you. You get the down, you run them over and go long. You get the reversal, you run them over and you go long. These are just a few of the nuances. These are the trades that work. Every entry we're going to take, even with a buy, is going to leverage a bunch of traders caught in the counter trend direction. That is really, really important. So I just want to point that out to you, that the scanner is going to show you the markets that have potential trades but you have to find a great entry. And listen, you may get into a market that's 5 miles off the 50. You're not going to take it. But this is nice. This is close. And this is two great signals here and here. Very low risk. And you're going to make a lot of money on the Forex markets here. Boom and boom. Now, and here's one of the keys. I don't want to beat a dead horse with this, but the risk you take with this trade is really low. The continuation to the upside is extremely rare. You're going to get losers. Nothing's perfect, but they're going to be few and far between. And I'll tell you what I find when I trade is most of the losers I take are due to human error. I make a mistake. So just adhere to the rules, have patience and discipline, and the winners will come. Aid, we're going to do better than that. I mean, we do have a PDF cheat sheet already, but what we're going to do is we're going to give you templates. The template is when you load is going to give you the market, give you the time frame. Everything's going to be set for you. And then remember, you're going to come into my master class that's going to be pre-recorded. So if there's anything, and in that master class, it's all, I'm going to look at multiple markets, teach you the methodology, and then it's going to be tons of questions and answers. And I'm not going to end that class until every question's been answered. And then you're going to get that video. So if you ever have an issue, you can refer to it. But we do have a PDF. I just want you to know that. Okay. This is a new version, John. This has been completely updated and revised. I mean, Sergio, who has a master's degree in programming, worked for, I'd say, 5 months to code in all of these signals. Now, if we look at the Euro USD, where is it here? We still don't have a sell because we don't have a red quant. And without the correlative markets showing red, you're not going to get a trade because risk is too high unless we can guarantee money flow is coming out of this market. You don't want to take in between trades. You only want to take the lowest risk. There we go. And you see it just went red. The EUR USD is right here. And it's on a 4 Unirenko. Now, why is that flat? Hold on a minute here. There it goes. Just one sell. It was off by a tick. That's all. And you would have gotten the signal right here. And down you go. Hey, Rob. Rob, it's up to you on your time frames. On the Forex, you can trade a 4-hour or a 1-day. I mean, I recommend on the Forex, I personally, I like the 15-minute because I think the 15-minute can keep you in a Forex trade for hours. And unless you want to take a multi-day trade, and you can do it, but I'm always concerned about taking a multi-day trade on a leverage instrument other than an option. Because in the morning, if something really bad happens at night, when the market opens, you could get crushed. So I just don't like to trade those higher time frames. And I like to, I trade options, and I have an options alert newsletter. Right now obviously we have some issues. The S&P has dropped considerably. It's the worst month it's had in 10 years. But up till this month, I was up about 50% in 3 months. Now I've given some of that back, but I've got plenty of time because these are long-term swing trades. I'm looking at 30 to 90 days out on my options. So it's just my personal feeling, but it's totally your call. If you want to take a multi-day trade on the Forex, you can do. Remember, the Forex never closes, so you're in a better position to take a longer-term time frame trade. And if you want, you can take a 2-hour or 4-hour. You're not going to get very many signals, but when you get one, it's going to keep you in the trade for 2 or 3 days. So it's really up to you, and you can experiment. Remember, you can put them both up here. You can put in a 1-hour, a 4-hour, and a daily, and see how they work for you. You tell Sergio the time frames you want, and he'll make them for you. And you tell him the templates you want, and he'll make you the templates. So you want a 1-hour, you're just going to dial it in on templates when you load. So you can experiment with multiple time frames. Nothing locks you into anything. Hey, Eric. It sure does work on ZB. I didn't load ZB in here, but listen, if it works on the E-mini, if it works on gold, if it works on crude, and it works on the NASDAQ, it's going to work on bonds and notes. I mean, really, they're no different than any other option. And the only reason I'm not going to add it is I need a new column because bonds are traded on a special Unorenco setting, and I don't have it. And I also, I would have to add it to the scanner or the analyzer, and then add it to the Laguerre and the quants and the background bias. Because, bonds has a very low volatility. And I think it trades off a 521. So we would have to format that for you. But you're going to get listen, here's what I want you to understand. If I hid the instrument up here, you would have no idea what this is trading, and it wouldn't matter. It looks the same. So like I'm saying, it really is instrument independent. Now, you don't know what this is. You don't know the time frame. If I set it for a 1 minute, but hit it, you just wouldn't know. It doesn't matter. And it definitely can trade bonds and notes. Definitely. In fact, bonds and notes have great correlative markets. I just want you to know that. I mean, you can imagine what the correlative markets are, because when institutional money flows into bonds and notes, it means risk is off, and there is a massive movement usually of money from stocks across the board into bonds and notes. So it's a very easy market to create our correlative, our quant line. It's very precise. So you can get good trades. That's, I think, a good instrument to swing trade, because you can stay in a bond and note trade for a long time. And bonds, I think, are 31.25 a tick. You can get a 15 or 20 tick trade on bonds. You can retire to Tahiti, I mean, on 2 contracts. That's a huge trade, and it's very lucrative. The only reason I don't day trade it, which is what I do in the room, is it's got such low volatility. Okay. I'm sorry, Eric. Sure, you can use it for end of day trading, Jim. It doesn't make any difference. You can use it for trading anytime you want. Like, you're going to be in a trading room that's going to trade at night, at 8 o'clock at night if you want to go. Then you're going to be in a trading room 4 times in the month that's going to trade the Globex Open. So you can see, it doesn't matter when you want to trade. It truly doesn't. As long as you get a signal, it doesn't matter when it comes. Okay, Alan. Well, I'm gonna work that out with David. Don't worry about that. I appreciate that. If you already have the software aid, this system is a little bit different. Now, if you already have the software, you just have to just call Rory, and you know, and we'll work something out with you. But if you have nothing, that, you know, that's the offer. And obviously we'd take that into account. Thank you, Umberto. Great presentation. Can't wait to start using it. Honestly, been looking for something like this for a while. Umberto, it will work for you. It works. It really will get you great entries. And I'll tell you, as important as the green is and the red for a buy and sell, the yellow is ultra important too. This is when all the commercial traders are trading. There's no multi-time frame alignment in trend. There's no multi-time frame alignment in momentum. There's no multi-time frame alignment in money flow. And who's trading it? All the other small commercial traders. There's no institutional money. There's no bank money. And you know what we're going to do? We're going to ignore the instrument because we are not going to trade with other commercial traders. We are only going to be in the market one teensy 1/8 step behind the institutions. That's when you make money. If you trade a flat market, you're going to get beaten up. You need that multi-time frame trend. And I'm telling you, it works really nice. Hey, Alan. Listen, it'll work on any time frame, Alan, anything you want. And it's very precise. Mahalo, entering on time is simply a matter of being fast enough when you see the green to pull up the market. Now, remember, you usually have time to get in. This is giving you a potential trade, and it's giving you an absolute direction. If you got a long on Johnson & Johnson, you know two things. One, you have a potentially great trade long, and two, you're not ever going to take it short. So that gives you a lot of information. It doesn't necessarily give you an entry. You have to do a little bit of work, and I can show you really quickly. We'll look at Johnson & Johnson. J&J, we have the 2510. So we'll I think we have the buy on the 410.20. So let's look at J&J and see what we got. J&J, Johnson & Johnson. And look what we got here. Look at that move on J&J. Now you would have gotten the long here. It's a little risky because it's a little bit too far off the 50. But you can see the terrific analysis of the market. Now, it tells you two things. One, this market is not in chop. And two, if you're going to trade anything, you're going to trade it long. Now, if you buy an at the money call here or an in the money call, you're going to make a lot of money. You do not have to buy Johnson & Johnson. All you have to do is just stay with the trade. And all of these backgrounds, which I'm going to go into in the master class, have different, they tell you different things. The most powerful is the green. That's going to trigger you in. Blue is still powerful. Green is more powerful. So there's some nuance to the system that I'll clue you in on. But you can see that the buy trigger just sent Johnson & Johnson flying. And that's what we want, to never get caught in the wrong direction. That's all. And if you day trade options, you're going to rack it up because you're rarely going to. And at the money call, if you can pull 3 or 4 of those, that go a buck or two in the money, you're going to make really good money. You can, obviously you can still swing trade or day trade futures, swing trade or day trade cheap stocks. This will work on any ticker. I'm bringing up the big ones, but it'll work on a small cap stock too. And you know, it just doesn't matter. Okay, Abe, I'll tell Rory. Okay, she did. Rory did. Abe, I'm sorry. John, this isn't an upgrade. This is a completely new system. But just give Rory a call, John. Okay? No, there's no more entry arrows, Rob. This is the entry arrow. This is not an entry arrow system. This is a completely new system. We've never shown this to anybody ever until now. And this is an entry arrow would be actually to take an entry. I have to show you where to take them. I don't want you to take an entry arrow. I can put the entry arrows in, but I purposely remove them because I want you to make the trades on a discretionary basis. I want to teach you how to do them, and you're going to come into the master class and you're going to get great trades. Much better than using a dummy arrow. I'm telling you. And I'll tell you right now, if you want the arrows in, I'll put them in for you. I mean, if you want this analyzer, you're more than welcome to them. We're still, not only are we looking to automate it, we have automated it. The automation is running right now. And let me see where we are here. If you hold on one second, I'll show you the automation today. I can only show it to you really quickly. Our automation right here is up $1,510 today. That's our automated system, trading off to the side. Now, it's not ready for release. It's still in beta testing. I got to look at it. I got to look at it one more week. But when I closed the trading room, John, it was up $900. Now it's up over $1,500. And it's got 3 configurable entries, and I have to look at everyone. And the Johnson & Johnson is still moving. I mean, this is just a terrific. All 3 lines are green. Johnson & Johnson this is a dead market right now, but it's still meandering to the upside. If it was me and I had it at the money option here, I would be out of it because there's just no volume here. And I would take my profit and run. But you see how powerful the signals are. And the automated system is already operational. It'll work with Ninja 7. 7 or 8. Thank you so much, Gary. Gary said I'm the world's best. My son tells me, my son would disagree with you because I'm always on his case, but I really appreciate it, Gary. Sure. Mahalo, would you give Rory, would you give Mahalo a call? John, Rory's here. You should be able to reach him today with no problem. He'll pick up. He may have been on the other line when you called, and our line's been ringing constantly. He will get your call. Yeah, right now, honestly, I am looking to hire another person, and I hope within the next month or so we have another person. Because between Sergio and Rory and myself, and you know, I have 2 independent contractors, and you know, they both work for me half time. All of us, I mean, we're all like, I mean, every time I go to sleep, you know, I need to be on an IV morphine drip. It's just a really hectic day. But it's good to be busy and not to be dead. But we're making all that matters to me, and I take the trading room really personally, is that I make money for everybody. And the trading rooms at night, um, David trades live. He's on a Top Step account. Every trade he takes is a live trade with his own money. Okay. No, when it's live, JT, I will roll it out. He's talking about the automation, but I don't want to get off topic here. I'll make sure John Rory gets back to you. Okay. So on this down close, I would have been out of this trade already. And I probably would have been out on this down close. I wouldn't have taken any further than this. But the background bias was still green here. I'm going to show you how to take these trades in the masterclass. It's really not a trading methodology class. It's really a trade entry system that's going to get you great positions. But we're going to go into a lot. And I'm not going to stop until you guys have all the information you need. So listen, everyone, have a really wonderful afternoon. Have a great weekend. And I hope to see you in my trading room on Monday morning. And because we're gonna make some money. If you trade futures, or even if you don't trade futures, you're gonna see how the methodology works, and your learning curve is gonna skyrocket. And David trades a slightly different methodology using the same software, so you'll get a slightly different view of how to take a trade. And you're gonna have 3 opportunities a day, always 2. To come in and watch live trades. And everyone I have a lot of traders from my live training, they know I take it with chart trader up, my stops and targets are projected, my profit loss is reviewed in depth. I look at every trade, is incredible transparency. And this is a really powerful tool. So have a wonderful weekend, and I hope to see you on Monday. Take care and have a really, really, and again, have a good weekend. And just let me show you our phone number one more time, and then I'm gonna head out. It's 786-732-4656. We already sold 3, so we got 7 more. And you'll also get the indicators. So if you're interested, that's really the package you should get. Take care, everyone, and have a great, great afternoon. Bye-bye. All right, Rory.